B-A-T-C-H-I-M-P-I-P-S. I've been B-A-T-C-H-I-M-P-I-P-S. I've been.
Hey, it's your man Charlie P. Today we're going to talk about the strategy I use to catch trend reversals and catch at least 100 pips minimum every single time. Minimum. Let's go. Okay, let me just start by saying that reversals are tricky trades. They are. I mean, them junts, they're tricky. They look so many different ways when they're setting up, but there's a common theme among, I'd say like 80% of them, and they're going to be a head and shoulders pattern, some variation of a head and shoulders pattern. So you really need to learn how to catch or be able to recognize what a head and shoulders pattern is. Essentially, you'll have like a shoulder, a head, and this is actually an upside down head and shoulders. So a shoulder, head, and shoulder. And I drew that one because I see that's just the first example that I'm coming across. So in this situation, we're looking at a shoulder, a head, and a second shoulder. Dang, I drew that box big. A second shoulder right there is what we're looking at. So, but that looks a lot of different ways. Actually, I remember when I just passed one, this right here. Here's another head and shoulders pattern, an upside down one. This was a shoulder. Here's a head. And then this was a second shoulder. But anyway, I don't want to get too off. So essentially, and I have rules written down for this, but I'm going to show you examples first and then show you the written rules. I just think it'll work better that way for this particular strategy video. But the very first rule that we're looking for is price has to be in the bands. And when price is in the bands like it is here, we have to find out whether or not we have divergence. Remember, divergence is simply when the candles are telling us one thing and Ehlers Fisher is telling us another thing. The Ehlers Fisher is my green line down here. Don't worry about the dotted line on this strategy at all. Just the green line when we're talking about stuff down here. So the reason I drew the line from here to here rather than, from here to here, for example, is because a head and shoulders pattern goes from shoulder to shoulder. So either way it goes though, candles are telling us price is going down. Ehlers Fisher is telling us price is going up. So that's opposite information. That means we have divergence while price is in the bands. So that means rule number one is met. Price is in the bands. Yes, we have divergence. Cool. And let me actually say this about divergence while I'm thinking about it, because I don't think I've said it before. But in order for divergence to be valid, it needs to start either below the 10 level down here or above the 90 level if you're looking for a sell, but we're looking for a buy. So it has to start below the 10 level in order for it to be valid. But moving along, the next rule, now that we have divergence while price is in the bands, is we're going to go to our reassurance chart and we're going to wait on price to touch the 33 MA. That's the green line. So once it touches the green line, then, that's all the second rule is. You're just waiting on that. Once that's touched, then you can go back to the main chart and look for basically your confirmation candle. Now, here's the thing. In this situation, you have to remember we're looking at a head and shoulders pattern. So that means we're expecting a second shoulder. The way that you can kind of know to anticipate a second shoulder, well, you kind of need to know what the formations look like. We already know what a head and shoulders look like. The other thing you'll see commonly is either a double top or a double bottom. So a double formation. The head and shoulders is more of a variation on a triple formation, but you'll basically get something like that, just a double formation. A lot of this is going to take chart time. I'm just going to be honest with you. You kind of got to keep looking at the charts and keep studying it, and you'll start seeing what I'm saying and how to recognize this stuff. We'll see a double top or double bottom, I'm sure, at some point. But I knew to wait on a second shoulder in this one. And when you're waiting on your second shoulder, what's going to happen is price is going to come up. It's going to dip back below the 10 EMA, which is the white line, and it's going to come back above it. Now, the key is the time of day that it comes back above it. We have very specific trading times that we're allowed to take a trade. for my strategies. So in this one, and I actually will just kind of show the rules real quick. Just focus on that right there. You're entering between, well, this is in New York session, so 7 a.m. to 11:45 a.m. All these are Eastern times. So just whatever time zone you're in, do what you got to do. These are Eastern times, Eastern Standard Time. So 7 a.m. to 11:45 a.m. And this candle is not going to allow us to enter in that range of time. So this isn't valid. We have to wait on that to happen again. So it's going to come up above, it rose back up above our 10 EMA. It came back below it. And so now we're waiting on it to go back to the other side in the direction that we wanted to go again. And it does it right here on this hourly candle. It closes back above the 10 EMA again in the direction that we want to trade. This time it happened during, let's see, that's 10 o'clock chart time. That would be equivalent to 3 a.m. Eastern time, which that falls within our time zone, our range of time that is acceptable to take a trade. And so then that means all we would do is just go ahead, boom, we enter the trade right there. And then you're gonna catch, within 5 hours, you've caught 100 pips. 1, 2, 3, 4, 5, 6 hours. I'm sorry. But either way it goes, you catch 100 pips real quick, and you can keep on catching a lot, because you can ride these trades out for days sometimes, if you want to. And that's 300 and some pips already. But anyway, I'm just going to keep going through examples. And as I go through examples and you see the same thing over and over, you'll kind of start to see what's going on. So I'm just going to kind of scroll through and all right, so here's another one. Let's look. We're looking right here in this area. So which you should know that, because rule number 1 is prices in the bands, right? So we're in the bands. Here's our divergence. Let's see. Well, I guess I'll have to start here because that's when it starts under the 10. But yeah, there's our divergence in prices in the band. So the next thing we do is we go to the reassurance chart. What's this? August 20th. Here we go. We go to the reassurance chart and we wait on price to touch the green. So it touched the green, the 33 SMA on this candle right here. So we go back to here. Hold on. Oh, the charts look a little different. So these are two different brokers. This is something you need to know. Different brokers, the price is going to look, the price action looks a little bit different. So on my Trader's Way, there's a little gap right here in the market, whereas on Turnkey, that gap is non-existent. But essentially, this is the candle right here that price touched that green line on the reassurance chart. The confirmation candle isn't valid. You know what? Or let me rephrase that. You can't enter a trade until the green line has been touched. I need to actually alter my rules, and I'm going to do that. And I'm going to leave this in because, let's see, you wait on the confirmation candle. How do I want to rephrase this? You know what? I'm just going to say it. This is worded incorrectly. What I should say is you cannot enter the trade. The entry won't be valid until the green line is touched. So there, I'm not perfect. I'm making mistakes, but I'm just going to leave that in there so you can know, I'm keeping it real. But so the confirmation candle was actually this one right here, this green line, or this green candle, when it closed above this one right here. So when it closed above that, then that was kind of my confirmation candle. I couldn't enter yet though, because I had to wait on the, the candles. Well, first of all, this was on a Friday. I can tell because this says August 20th down here. Then it skips to August 23rd. So let me just go ahead and say this while I'm here. Fridays normally are not gonna, a reversal trade is normally gonna happen on Tuesday, Wednesday, or Thursday. Mondays, yeah, but Fridays are the least common day for it to happen, like the least probable day. Friday, it's, it might start setting up and then finish the setup on Monday, and that's what happened here. But on Monday, price dipped below the 10 EMA, and then it closed just above it. Let me zoom in so you can see it a little bit better. So you see it, this is Monday, the first candle on Monday, it went down. Then it came up and it closed above the 10. Here's our entry. So same thing how we did on the other one. So let's just keep scrolling and find something else. All right, let me clear the chart up a little bit so I can get this stuff. Double click. Hold on, I double clicked it. All right. So here's another one. Prices in the bands. Now this one, see, this is a harder head and shoulders to spot. It's still a head and shoulders pattern though. Here's the first shoulder. This is the head. And then this is the second shoulder. Here, I'll do it actually. I'm gonna do it, this way. This is the first shoulder. This was the head, and this whole little area counts as the second shoulder. Let me delete them junts. Okay, so on this one, price comes down into the bands, and here's our divergence starting at that shoulder over here, because this says going down, this says it's going up. Rule number one is met. Prices in the bands, we have divergence. Next thing we need to do is go to the reassurance chart and see if we have, see where our green line finally gets hit. So we know we can't enter the trade until the green line gets hit, and that happens on this candle right here, which is equivalent to this candle on the main chart. So at the same time that that happens, we actually also just surpassed the center or the anchor point. Because when price came up here and dipped back down, this was a good anchor point, and price actually came up and just barely passed that, which if I zoom in, you can see it better, but it just barely passed that where this closed. So to me, that confirms, like, all right, cool. That's our confirmation candle that price is definitely heading up. Next thing I need to do is see, when can I enter this trade? So what time did this happen? That was at 12. All right. So yeah, this was outside of trading hours. So I know I can't enter right now just because this was at like 5 o'clock in the morning, but price came back under the bands. Under the 10 EMA, and then it popped right back up above it. What time did it pop back up above it? This was at 14 chart time, which means I would have entered the trade as soon as this candle opened, which was 15 o'clock chart time. That's equivalent to like 8. That's New York session start. That's like 7 or 8 a.m. one of them, something like that. But I just know it's the start of New York session. So we would have taken the trade right here. And then, within a few hours, you're up 100 pips and you can catch, there's 200 something pips. This is probably a 300 pip trade as well. So again, as soon as the hourly candle closes above the 10 EMA on that second shoulder, you just hop in after it closes. Keep it pushing. Let's find something else. All right. I'm glad I saw this. This right here is actually an exception to the rule. And I actually have that written in my rules here, exception to rules. If you see a uniform triple top or a triple bottom, and this is going to be a triple bottom in this situation, enter as soon as the candle closes in your anticipated direction after the third hit. This is valid for H1 or M15. So this is on the H1 chart. We have 1, 2, 3 hits to the bottom under the bands, right? And the divergence looks a little funky on this one. Actually, no, it don't. This is actually a big old head and shoulders pattern too. Here's a shoulder. This down here is a head, and this is the second shoulder. So that's why our divergence starts kind of over here and goes from here to here, and versus, slightly down here, but slightly up here. But anyway, we could have caught this trade down here though, because it's a triple bottom. And so anytime you got a triple bottom, then as soon as the candle goes in the direction you want on the third hit, which this is that candle, you can just go ahead and enter the trade. You ain't got to wait on no candle to pass the anchor point type thing, which this would have been my anchor point that I'm looking for it to pass. You don't have to wait on all that when you're dealing with the triple formation, a uniform triple formation. You could have got in about right here, and again, there's an easy 132 pips right there. You could have kept riding this one up to almost 200 pips, and that was a good trade to take. And actually, while I'm thinking about it, just to show another example, this was another triple formation that I actually took on Friday, but this 1, 2, 3 hits to the high. And then, well, I wasn't up when this candle happened, but I got up right around when this candle closed, and I went on and hopped in here, and I got out because it was Friday. So I only took like 40 pips out of this one, and I don't like holding stuff over the weekend if I can help it. If it would have went down further, like if it had went down maybe like 70 or 80 pips or something, I'd have went ahead and held it. But 40 pips, I just wasn't confident enough to just be like, if the market would have gapped up, 70 or 80 pip, if I had that kind of cushion, I'd have held on to it. But 40 pips, that's not enough of a cushion for me. But it didn't gap, and it's, it's probably going to continue to fall, but that's another triple formation, what it can look like. But anyway, we'll just keep on scrolling. So that's an exception to the rule, a triple top or a triple bottom. And you know what? Actually, because I just remember, I don't know how far back. I know it was on GJ. Here it is. And I say it wasn't that long ago. It was about a month or two ago. So yeah, it was right here in GJ. And I just remember this formation. This is, remember, and I just told you the exception to the rule is valid for H1 or M15. So for the M15, this, I'm gonna draw a box around it so we're looking at the same thing when I go to the 15-minute chart. When price is in the bands, I'm looking for the divergence. It's not really here, but prices in the bands, I just kind of automatically look at the 15-minute chart just in case. And this is one where we had 3 hits to the high on the 15-minute chart, and we did have divergence here, even though it starts kind of back here like that. But 15-minute chart is going to look a little bit different than the H1 for divergence, but we still have that divergence there, at least on the 15-minute chart. But since we had this triple top in the bands, then when this candle closed, here's my entry. Okay, and then that was easy. Again, 100 pips. This one, so yeah, that was close to 200 pips before it even kind of took a break and started coming back up. So I say all that to say, just if you see a triple formation pattern on either the H1 or the M15, just go on and take the trade as soon as it starts going in the anticipated direction, on whichever time frame. So let me go back to GU and then see, can we find another good example? All right, so here's one, and this is why reversals are so tricky, because this one I have to follow a different set of rules on, and I feel like I'm about to confuse you even further than you may already be before catching on to it. But I'll just say it this way. This one I would take the entry on a 15-minute chart. It's not a head and shoulders pattern, but it's still, it's in the bands. We have divergence. I'm not going to draw it this time because I think that you can see the divergence by now. But on this one, this would have been my confirmation candle. Just this red one right here. And I would have came down to the 15-minute chart. See, that's April 20th. So let me scroll back, find April 20th. pretty much would have came down. Actually, I did it on the reassurance chart. When it came down, then it's going to come up and it's going to grab my 33 on my 15-minute chart. And as soon as it would have grabbed my green line, then I would have entered the trade pretty much right here on this green candle as soon as it came up above that green line. And I have that in my rules. I need to rewrite these rules. Yeah, on the reassurance template, if price comes, well, I said down, I should say down or up to grab the 33 or the green line within the same session, then enter when it grabs the 33. And that's what happened here. Is this is in the same session. This was a New York session trade, I think. What time does this happen? Nope, that's London session. But this is a London session trade. It is within the proper trading hours. Once you get that confirmation candle, if the price comes up and it grabs the 33 moving average in the same session, then you go ahead and just get in on the 15-minute chart. Notice this though, it did not touch my green line. And remember, that rule is for the head and shoulders pattern. When it has to touch the green line before the entry is going to be any good. But when you're dealing with this one's more of a double topish kind of trade. There's not a true triple formation because price kind of comes up and it gives it a little downward movement here, but then it just more so just goes straight up from there. So this is more of a double formation. And if it's a double formation, you're normally going to end up taking the trade within the same session as the confirmation candle, like we did right here. I'm just going to leave that one alone because I really don't want to confuse. No, yeah, let's just move along to a different example. I'm gonna go to a different pair altogether. This one's actually one I made a video on, the last one that I made a watch me take the trade video, and you saw me enter the trade about right here when price came up here and I got in and I caught 126 pips, and I showed me taking that trade real time and taking profit real time. But what I didn't show was the first entry I took. And if you remember the rule that I just told you about the triple top or triple bottom, that's what we had right here. This was a head and shoulders pattern though. You had shoulder, this was a head, and this was a second shoulder. But also we could have taken a trade, which I mean, I did, just didn't, you can see it. 1, 2, 3 hits to the high. This candle, as soon as it closed in our anticipated direction, you hop in right here. It kind of closed right at 100 pips. As you can see, 101 pips. But when it hit that 100 pip mark, I'm out of there simply because I know it's about to end up being a big head and shoulders pattern. Just because sometimes, again, it's going to take chart time to start realizing what's going to turn into a head and shoulders versus what's going to just keep going. But still caught 100 pips off that triple top right there. So that's all that one is. That's very simple. If it's a triple top or a triple bottom, get in the trade. Period, point blank. All right, so this one, here's one, is in the bands. We have divergence. It's a head and shoulders pattern again. Here's our first shoulder. Here's our head. And here's the second shoulder. And this is actually kind of cool. If you notice, we actually have a mini head and shoulders pattern inside of a larger head and shoulders pattern. So the larger one is shoulder, head, shoulder, and then here's the mini one, shoulder, head, and shoulder. So I'm kind of nerding out right there, but that's just cool to me when I see little inception stuff like that. But anyway, price was in the bands. We had the divergence, pretty much doing, I said I wasn't going to draw these divergence lines anymore because I really want y'all to, you know, just kind of be able to spot this stuff. But I realized that there's a lot of newcomers looking, so I don't want to leave you hanging. But anyway, here's our divergence. Price is going down on our candles, but it's going up for the Ehlers Fisher. Next thing we want to do is go to our reassurance chart and see when does price touch the green line. So let's see, I'm on CJ. This is September 20th on CJ. Let me find, here we go. All right, so price hit the green line on this candle here. So we know sometime after this, we're good to enter. So on our reassurance chart, that's equivalent to this candle here. So being that it's a head and shoulders pattern, we wait on it to come back below the 10 EMA and then close back above it within proper trading hours, which it did right here. And I'll zoom in so you can see it just a little better. You see it cut back up and close back above our 10 EMA right there. So here's our entry, boom. Or well, technically it'd been just a little higher, and we don't have much drawdown. And as you can see, I don't even have to show how many pips per se, but I mean, that's over 200 pips that you could have held and caught that, possibly even more. But oh yeah, oh dang, that mug went up forever. But either way it goes, that's the same rules as what we saw on the other ones. I need to find one that goes, all these are going up. I want to show a head and shoulders that's going down. Let me see, let me just go over here and try to find one for you. Ah, that's ugly. I would have missed that one. I'm not talking about that. That's going to get too complicated. All right, here's one. This isn't a head and shoulders, but it's still something you need to see. All right, so this one, prices in the bands, is actually not divergent though. And the reason I was like, it's something you need to see is because I'm just going to be honest. I mean, price says it's going down here, and is, you know, this also says it's going down. This is one I just know I would have made an exception on, but that's more so based on just my experience in the market. There are some times where I'm just like, you know what, forget it. The rules ain't all the way met and I shouldn't take it. I should have probably let it go. But I'm so used to seeing some things that I kind of know when I can give a little leeway, which is not often at all. We're talking about once every few months I'll see something like that. So not something that happens often, but at least it was, you know, it was definitely peaked above the 90 level. So I had that much, but technically, no, it's not divergent. However, the rest of the rules should be pretty much met. Let me see if I can just go to the reassurance chart here without jacking up. All right, cool. So it came down and it touched our green line right here on this candle. So anytime after this, I can pretty much enter the trade. And then let me go back to my, actually, I don't even need to. This would be my anchor point because price came down and bounced off of here. And then this red candle broke through that and closed past this line, you know, this kind of little level of support, so to speak. And then this is a trade that it happened where on the 15-minute chart, see, that's June 20th, the 15-minute chart, it came back up in the same session. It grabbed our green line. And so here's our entry point. Well, I'll just drag this line up to show the entry point. We would have entered as soon as it touched the green line. And then you catch 100 pips or more, which, I mean, that first move was 225 pips right there that you caught it quick. Let me go back to the main. Dang it. I didn't mean for that to happen. All right, so let me just pass that one and keep on. All right, so here's one more, and this will be the last one that I do, and we'll call it a day. And this is actually another triple top. So here's the 1, here's 2, here's 3. Okay, I'm actually glad I saw this. I would have took an L right here first, and then I'd have made it all back. I'm gonna show you why I would have took an L, I'm probably sure I did, because I know I took this trade, but yeah, I would have took an L on this one. So here's the thing, 1, 2, 3, right? Now, when this is the first candle that is in our anticipated direction, this candle happened at what time? 9 o'clock chart time. So yep, we're within the proper time frame or the time range that we can trade. I would have took the trade right here at the bottom of this, and I'd have put my stop loss probably just above that, and it would have got me. And I'd have been like, doggone, I know this is a triple top, and then it would have got me and then came right back down. And when it came back down, I don't know if I would have entered right then or if I did, but I can say if I didn't enter there, then as soon as this next candle closed below the 10 EMA, then I'd have came right back in right there on this bottom line. And then, so yeah, I would have took, 20 pips L on that, but then we would have made it all back plus some, because that's, just this very first move is 100 pips right there, and we could have held it for, close to 200 pips. But anyway, so there's another triple top example. Let me just find one more. I'm going to go to a different pair altogether. Okay, here's one that I found on GU. This is another head and shoulder situation. Shoulder number 1 is here, head, and then shoulder number 2 is here. So, of course, prices in the bands. We've got our divergence going from shoulder 1 to shoulder 2 versus right here from point A to point B. We've got opposing information. So divergence is there. I've already looked on the reassurance. Well, let me show you. I ain't gonna have you take me at my word on it. Price already crossed through the green line, and it touched the green line over here. And so next thing that we're doing is, of course, looking for a confirmation candle, which in this situation, we're looking for the second shoulder to happen. So it comes down, and then it comes up from here. So this is going to be an anchor point that we're looking for. Comes up, comes down, comes back up. So now we're adjusting our anchor point to this one right here. Comes up, comes down, and here's the other. So when it came up and back down, it did two things right here. Number one, it finally gave us our confirmation candle, and two, it went on the opposite side of the 10 EMA and then closed in the anticipated direction that we wanted. Now, what time did that happen? That was at 13, which is not during trading hours. So this doesn't count basically, but look what happened. It came up on the opposite side and then closed back in our anticipated direction again. This time it happened at what time? 17. That's 17 is what, like, I'm trying to remember what time 17 is on the charts. It's the end of New York, not the end of New York, but the end of our trading times in New York. It's probably like 10 a.m. or something like that, or maybe 11 a.m., which is still, within this range or whatever. So on this one, it closes. So here's our entry point. As soon as that one closes, and dang, 1, 2, that's 3 hours. 3 hours, you just caught 131 pips. But you keep on holding that, and that's 250 pips pretty much, and that continued down for a minute. So it's, again, same thing. You kind of get where I'm going. I would hope this isn't something, if you're still confused, it's fine. I've been looking at this mess for years, trying to dissect this stuff, but did nobody tell me this? So I'm kind of putting all this together from scratch, versus just take what I gave you and try to start finding this stuff on your own. And it's going to take practice, and it takes seeing it in real time play out as well. So but just remember, again, prices in the bands, and we have divergence. Make sure it touches the green line. Don't enter the trade before it's touched the green line on H1. And then if it's a head and shoulders type situation, it's going to come back above, or basically it'll come on the opposite side of the 10, and then it's going to close on the right side of the 10. It has to close at the right time of day. Like this candle, it didn't do it on the right time of day, so we don't worry about that. And then it did it again. It came back up here, and then it closed back on the right side during the right time of day. So that was our entry. just study it. It's gonna take multiple times seeing it. I will put out live trade videos showing my thought process leading up to these, so you can see me do these in real time, because that'll help a lot more, maybe even in this strategy video. But anyway, y'all have a good one, and see y'all at the top.